If you've been watching the Vancouver condo market over the past few months, you've probably noticed something strange happening. Sales have slowed to a crawl, listings are piling up, but prices haven't crashed the way many expected them to. And here's the thing, nobody's really talking about thousands of condo owners, investors, and would-be buyers are now stuck in a situation that almost nobody saw coming. They can't sell, they can't buy, and for many of them, they can't even refinance their way out of the problem. The Vancouver condo market hasn't just cooled off, it has quite literally locked up. And today I'm going to break down exactly how this happened, who's getting hurt the most, and what it means for anyone thinking about buying or selling a condo in Vancouver over the next 12 to 18 months. If you find this kind of real estate analysis helpful, take a second right now to hit that subscribe button and turn on notifications so you don't miss any future updates on what's really happening in Canadian real estate markets. Let's start with the basics of what's actually going on. To understand why the Vancouver condo market has locked up, you need to understand the mechanics of how markets freeze in the first place. In a normal, healthy real estate market, you have a flow of transactions. Buyers come in at entry-level price points, usually condos. First-time buyers purchase starter condos. Then a few years later, they sell those condos and move up to larger condos or townhouses. Previous condo owners sell their units and buy detached homes. Investors buy condos, rent them out, and eventually sell to cash out their equity. This creates a ladder effect where everyone is constantly moving up, down, or out of the market. Money flows, properties change hands, and the market functions. But what happens when that flow stops? What happens when the first-time buyers can no longer afford to enter the market? What happens when move-up buyers can't sell their condos to fund their next purchase? What happens when investors can't find buyers willing to pay what they need to break even? The entire system grinds to a halt. And that's exactly what we're seeing in Vancouver right now. Let me give you some numbers to put this into perspective. According to the Real Estate Board of Greater Vancouver, condo sales in the first quarter of this year dropped by more than 30% compared to the same period last year. That's a massive decline. But here's where it gets interesting. Active listings for condos have surged by over 40% year over year, so you have far fewer buyers and far more sellers. Under normal circumstances, that kind of imbalance would trigger a significant price correction. Basic supply and demand, right? More supply, less demand, prices fall. But that's not what's happening. Condo prices in Vancouver have only dropped by about 5 to 8% from their peak, depending on which neighborhood you look at. Some areas have barely moved at all. Others have seen declines closer to 10%, but nothing like the 20 or 30% crashes that some analysts were predicting. So why aren't prices falling further when there are so many more condos for sale and so few buyers? The answer reveals the true nature of what's happening in this market. Sellers aren't selling, or more accurately, they're listing their condos, but they're not actually accepting offers unless those offers meet their minimum acceptable price. And for many sellers, that minimum acceptable price is essentially what they paid for the unit, plus their closing costs, transaction fees, and in some cases enough profit to cover the carrying costs they've incurred while owning the property. Here's where the math gets ugly. Let's say you bought a condo in Vancouver in 2021 or early 2022, which many people did. At that time, prices were at or near all-time highs. Let's say you paid $800,000 for a one-bedroom plus den in a desirable area. You put down the typical 20%, so $160,000. Your mortgage is $640,000. At the time, you locked in at a rate around 2% because that's what rates were back then. Your monthly payment was something like $2,700. Now let's look at where you are today. That condo that you paid $800,000 for might now be worth somewhere between $720,000 and $760,000 on paper, based on recent comparable sales. But here's the problem. If you sell at $740,000, you're already taking a $60,000 loss on the purchase price. Then you add in realtor commissions, which in British Columbia are typically around 7% on the first $100,000, and then declining percentages after that. On a $740,000 sale, you're looking at commissions in the range of $25,000 to $30,000. Add in legal fees, potential property transfer taxes if you bought another property, and other closing costs, and you're looking at losing somewhere between $80,000 and $100,000 on this transaction. For many owners, that represents a huge chunk of their original down payment. Some would walk away with almost nothing. And it gets worse. Many condo owners in Vancouver aren't in a position to sell at a loss even if they wanted to. If your condo is worth less than what you owe on the mortgage, you're underwater. You can't sell without bringing cash to the table to close the gap. Some owners are looking at needing to bring $30,000, $40,000, even $50,000 to their lawyer's office just to complete the sale. Most people don't have that kind of money sitting around. So they're stuck. They can't sell. They have to keep paying the mortgage, the strata fees, the property taxes, and hope that the market recovers before their situation gets even worse. Now let's talk about the investor side of this equation, because that's where some of the most dramatic stories are playing out. Vancouver has always attracted real estate investors, both domestic and international. For years, the strategy was simple, and it worked. Buy a condo, rent it out, let the tenant cover most or all of your mortgage and expenses, and then sell a few years later for a tidy profit. The rental income provided cash flow, and the appreciation provided wealth building. It was almost foolproof. But that math has completely broken down. Investors who bought condos in the last 2 to 3 years are now facing a triple squeeze. First, their property values have declined, or at best stayed flat. Second, their mortgage rates have exploded if they had variable rate mortgages or when their fixed terms came up for renewal. Someone who was paying 2% is now renewing at 5 or 5.5%. On a $600,000 mortgage, that's the difference between paying around $2,500 a month and paying close to $3,500 a month. That's an extra $1,000 a month out of pocket. Third, while rents in Vancouver have increased, they haven't increased enough to cover these dramatically higher costs. An investor might have been cash flow positive by $200 a month 3 years ago. Now that same property might be cash flow negative by $800 a month after the mortgage renewal. So what options does that investor have? They can sell. But as we discussed, selling often means realizing a significant loss or even being underwater. They can try to raise rents, but British Columbia's rent control laws limit how much you can increase rent for existing tenants. They can try to renovict or find other ways to remove tenants and reset to market rent, but that's become legally complicated and socially unacceptable in many cases. Or they can just keep bleeding money every month, subsidizing their tenants' housing out of their own pocket, while hoping the market turns around. Many investors are choosing to hold and bleed rather than sell and lose, and this is contributing to the market lockup. These investor-owned units aren't coming to market at realistic prices because the investors literally cannot afford to sell them at what buyers are willing to pay. So the units sit there listed at prices that don't move month after month. Let me tell you a specific scenario that I've seen play out multiple times. An investor bought a pre-sale condo in 2021. At that time, they put down a deposit, typically 15 to 20%, with the balance due on completion. The building was supposed to complete in 2024. They were counting on being able to get a mortgage for the remaining balance when the building finished, and they expected the unit to have appreciated in value by then, giving them instant equity. Fast forward to completion day. The mortgage rates are now double or triple what they were when the investor bought. The bank does their appraisal and says the unit is worth 10% less than the purchase price. The investor can't qualify for a large enough mortgage because of the stress test at the higher rates. They're stuck. They either have to come up with a massive amount of additional cash to close, or they have to try to assign the contract to someone else, often at a loss, or in the worst case, they walk away from their deposit entirely. I've heard stories of people losing $100,000 or more because they simply couldn't close on their pre-sale purchase. This pre-sale crisis is creating another layer of lockup in the market. Developers are seeing assignment listings pile up for units in buildings that haven't even completed yet. Some developments have dozens of assignments listed at prices below the original purchase price. This creates a bizarre situation where brand new condos in brand new buildings are effectively competing with resale inventory at discounted prices. It puts downward pressure on the entire market, but also creates confusion because you have all these different price points for essentially similar products. Now let's talk about the buyer side of this equation, because buyers are stuck too, just in a different way. The obvious problem for buyers is affordability. With mortgage rates at their current levels, the same monthly payment that would have gotten you an $800,000 condo 3 years ago now gets you something closer to $550,000. The buying power has been absolutely crushed. But here's the less obvious problem. Many potential buyers are also current condo owners who need to sell their existing unit before they can buy their next property. They're stuck in what's called a conditional market, where every transaction depends on another transaction happening first. Imagine you own a one-bedroom condo and you want to upgrade to a two-bedroom. You need to sell your one bedroom to fund the purchase. But buyers for your one bedroom are scarce because first-time buyers can't afford to enter the market. So you can't sell, which means you can't buy, which means the person selling the two-bedroom you want can't sell either, which means they can't buy their next property. And on it goes. The entire chain of transactions breaks down when one link fails. This is why you're seeing so many conditional offers in the Vancouver market right now, and why so many deals are falling through. Buyers are making offers conditional on selling their own property, but then they can't sell their own property, so the deal collapses. Sellers are getting frustrated because they keep accepting offers that never close. Everyone is waiting for everyone else to move first. Let's look at some of the demographic groups getting hit the hardest by this lockup. First, you have young professionals who bought condos in 2020, 2021, or early 2022 as their first home. Many of them stretched their budgets to the absolute limit to get into the market before it ran away from them even further. They used every dollar they had for their down payment. They took on the maximum mortgage they could qualify for. And now they're trapped. They can't sell without a massive loss. They can't refinance at reasonable rates. And many of them are coming up on mortgage renewals where their payments are going to jump by hundreds of dollars per month. Some of these people are looking at their housing costs consuming 50 or even 60% of their income. That's not sustainable. Second, you have small-scale investors, people who own one or two rental properties as part of their retirement plan or wealth-building strategy. Many of these folks are not sophisticated real estate investors. They're teachers, nurses, accountants, regular people who were told for decades that real estate is the safest investment in Canada and that Vancouver prices always go up. They believed it because for a long time it was true. Now they're stuck with properties that are costing them money every single month, and they're too close to retirement or too dependent on the equity they thought they had to absorb a major loss. Third, you have immigrants and newcomers to Canada who bought condos as their first step in establishing themselves in the country. Many came from countries where real estate is the primary store of wealth. They put everything into their Canadian condo purchase. Some used money that their extended families pooled together. And now they're seeing that investment potentially wiped out. The psychological and financial impact on these families is enormous. Let me talk about what happens next because this situation cannot persist forever. Historically, when real estate markets lock up like this, one of three things eventually happens. The first possibility is that sellers capitulate. Eventually, life circumstances force sales, divorces, job losses, relocations, deaths, retirements. As time passes, more and more owners will be forced to sell, regardless of the financial pain. When enough forced sales happen at lower prices, those become the new comparable sales, and prices gradually adjust downward until buyers return to the market. The second possibility is that buyers stretch back into the market. This could happen if interest rates come down significantly, which would restore buying power. It could also happen if incomes rise enough to make current prices affordable, although that seems unlikely given how expensive Vancouver is relative to local wages. Or it could happen through government intervention, like expanded first-time buyer programs or reduced stress test requirements. The third possibility is prolonged stagnation. This is essentially the Japan scenario, where prices don't crash dramatically, but they also don't recover. The market just sits there, locked up for years or even a decade. Properties trade hands occasionally when absolutely necessary, but the normal flow of transactions never really returns. Real values erode slowly through inflation, while nominal prices stay roughly flat. My analysis suggests we're most likely looking at some combination of all three scenarios. There will be forced sales and price declines in certain segments of the market, particularly for older condos in less desirable locations, and for investor-owned units where the carrying costs become unbearable. There will be some recovery of buyer activity when rates eventually moderate, but probably not for another year or two at minimum. And there will be prolonged stagnation in certain price points and neighborhoods where neither buyers nor sellers are motivated to move significantly from their positions. One thing that I think is underappreciated is how much this lockup is going to affect the broader Vancouver economy. Real estate transactions generate enormous economic activity. Lawyers, notaries, real estate agents, mortgage brokers, home inspectors, movers, furniture stores, appliance retailers, renovation contractors. All of these industries depend on properties changing hands. When transactions drop by 30 or 40%, that ripples through the entire local economy. Some of these businesses are going to fail. Jobs are going to be lost. And that creates a negative feedback loop where people who've lost their jobs or seen their incomes decline become even less able to buy condos, which further suppresses the market. I also want to address something that I know a lot of people are wondering about. What about foreign buyers? Didn't the foreign buyer ban solve the problem of outside money inflating Vancouver real estate prices? Here's the reality. The foreign buyer ban, which took effect at the beginning of 2023, has had some impact on the market, but it's been much smaller than many people expected. That's because foreign purchases were already a relatively small percentage of overall transactions. The real driver of Vancouver real estate prices over the past 2 decades has been domestic speculation and investment. Combined with population growth from immigration and interprovincial migration, combined with constrained supply due to zoning and regulatory barriers. The foreign buyer ban removed one source of demand from the market, but it didn't fundamentally change the dynamics. And in some ways it's contributed to the lockup, because some foreign owners who might have sold their properties and exited the market are now holding on, waiting to see if the ban gets modified or if they can find ways to transfer ownership to family members who are permanent residents or citizens. Let me give you my honest assessment of what someone should do if they're currently stuck in the Vancouver condo market. If you're an owner who needs to sell, my advice is to be realistic about pricing. Look at what's actually selling, not what's listed. Understand that the market has shifted and the prices from 2022 are not coming back anytime soon. If you can afford to sell at a loss and move on with your life, that might be the right decision. Sometimes cutting your losses is better than bleeding slowly for years. If you're an investor who's underwater, you need to do the math on how long you can sustain negative cash flow. If you're losing $800 a month and you can only sustain that for 12 months, then you need to start planning your exit now, not in 11 months when you're desperate. Desperate sellers get the worst prices. If you're a potential buyer waiting on the sidelines, this is actually a reasonable time to be patient. The market dynamics favor you right now. Sellers are motivated. There's plenty of inventory. You have negotiating power that buyers haven't had in Vancouver for years. Don't rush into a purchase because you think prices are about to bounce back. There's no evidence of that happening anytime soon. And if you're someone who owns a condo and is just living in it as your home without any plans to sell, then honestly try not to stress too much about paper values. If you can afford your payments and you like where you live, the short-term fluctuations in your property's value don't really affect your day-to-day life. Focus on making sure you're prepared for your mortgage renewal and that you have a financial cushion for unexpected expenses. The Vancouver condo market is going to work through this lockup eventually. Markets always do, but it's probably going to take longer than most people think, and there's going to be real financial pain for a lot of people along the way. The easy money days in Vancouver real estate are over. The idea that you could buy any condo, hold it for a few years, and walk away with a profit is no longer valid. We're entering a period that requires much more careful analysis and much more realistic expectations.